Hi everyone, and welcome to my macro outlook. My name's Chris Tubby. I'm founder of Trading for Tomorrow, and then it's followed by some technical analysis on some of the contracts that I trade. Okay, so as usual, let's start with our macro outlook. So, last week we saw the ECB cut rates. Although, they didn't give any forward guidance, which is not surprising because, you know, possibly if they hadn't said they was going to cut rates in June, that they may not have even done it, just because the data that's coming out is still that little bit too strong, especially around earnings. And in the US, data was pretty mixed. However, Friday's NFP was, wow, that was a big beat. And of course, average weekly earnings was higher as well. Now that rallied the dollar because, as yet again, it cast doubts on any early rate cuts from the Fed. This weekend, there's been the EU elections taking place, so I'm not sure how long it's going to take before we get the outcome of those. Now, stocks bounced Wednesday, and then they held on to that for the rest of the week. Didn't really sort of race away, but they steadied after Wednesday. And they, just slightly oil sort of had a bit of a rally. WTI finished above $75 again. Earlier in the week, it was looking quite weak, but it's managed to find a bit of a recovery. Last weekend was after the OPEC decision where they stated that they're probably going to increase production by the end of the year, so it's a little bit negative. And then you've got other countries that are in non-OPEC that are increasing production as well, so a little bit of a mixed one. And then surprising, gold dropped $100 Friday. Dragged silver down quite a lot as well. Okay, so, if we think back just over 2 years ago, central banks began their steepest rate hikes that's been seen for decades. And of course, they've held on to those rates. That higher for longer is still with us. And that's really despite the fact that, we are starting to see sort of mini cuts, Bank of Canada and, of course, ECB last week. However, we're in a situation where inflation is still refusing to hit that sort of 2% target rate. And really central banks may be finally admitting defeat, the fact that they're cutting before they get into that 2%. Or it could just be that they're fearing the economic downturn that's potentially around the corner. I'm not going to bore you with my take on America again, but, I don't see it as rosy as the data is forecasting. Now, when we look at sort of geopolitical situations, we've got Russia, Ukraine, that war just continues. Ukraine is finally starting to receive some of those stocks of weapons that they'd been promised. And that is now giving them the ability to strike deeper into Russia. Israel is probably halfway through taking Rafah. There was 4 hostages released over the weekend. Fantastic. However, Hamas and Houthi, with them, this war could be far from over. I think even when the military action's over, then, there could still be more fighting politically, however it turns out, over what happens next to Gaza, how that's going to be sorted out. And then, of course, there's all the rebuilding that needs to be done as well. And this week coming, there's inflation data coming out from lots of countries, including India, Japan and China. The UK's got GDP. Bank of Japan's also got their rate decision. UK employment data. Again, watch for those average earnings, as that's one of the Bank of England's metrics for inflation. And of course, now that we've had the ECB meeting, there's going to be lots of ECB speakers this week. and we will also get the OPEC monthly report. In the US, we've got CPI, PPI, and of course we've got the FOMC meeting. FOMC meeting, I just, again, I think it's just going to be a done deal. That it's unchanged, data dependent, and of course that data at the moment is too strong for them to cut rates. And traders are almost on a monthly basis changing their ideas of when that first rate cut's going to come. For me, it's going to be past September and maybe even December. But of course, it really is based on data. And again, then it's a matter of how reliable that data is, as far as I'm concerned. I'm not a big fan of some of this data, especially any surveys and all that. Okay, now I'm going to just carry on with the last couple of slides and then move on to some technical analysis for you guys.
Now, I just want to sort of just talk a little bit here about my services that I offer. So there's a daily newsletter that includes global news, headlines, my views, full articles. That is a subscription service. There's one-day workshops. This will help you to discover if trading could be your next career or even just a second income. Otherwise, maybe you're already trading, but there's a few gaps that you'd like to fill in, and I can help you with that, because that will accelerate your trading and your performance. And then there's a 1-week intensive course. That's going to make you feel competent and confident after just 1 week. It's going to give you those foundations that you need to build your trading career on. And if you've got that inner trader, we'll find it. And now that does also include a free trading challenge. Then I do a Flexi Masterclass, which includes 6 weeks of guided learning. They can be split up. You don't have to take them all at once. And this is designed to provide you with all the knowledge and trading tools that you're going to need to navigate any market and also on any asset class. I trade them all. And as I say, you can spread those weeks out over months if you need to. It's no problem for me. And again, that does include a free trading challenge. Now, trader mentoring, I'm doing more and more of this. And this is to help you reach that next level time and again. And I'm doing much more in the way of one-on-one sessions right across everything that I'm doing now, rather than sort of looking for big groups. I do provide a lot of trader educational content to individuals, exchanges and brokers. And as I mentioned earlier about the trading challenges, if you're looking for a funded trading account, then you can contact me for details just about the ones that I use, or you can sort of take one of the courses where I'll give it to you for free at the end of it. Okay, so then moving on to our disclaimer, just to make you aware that trading does involve the potential risk of loss of capital and is not suitable for everyone, although hopefully it is for you. And many companies provide leverage, so just be aware that you can lose substantially more than that initial investment. Everything I include in here is just purely for educational purposes. I'm not trying to encourage you to trade or invest. That must be your decision. And of course, before you make that decision, you've got to consider the risks involved, definitely your financial situation, your level of experience, and your risk appetite. And of course, it's important that you only risk capital that you're prepared, but also that you can afford to lose. And if you've got any doubts whatsoever, seek independent financial advice and do that before you risk your capital. So many people come and find me after they lost money, which is sad. They should come to me before. And yeah, so listen, that's it for part 1. I hope to see you in part 2, where I'm going to do some technical analysis.